Ladies and gentlemen, good day and welcome to MINDA Limited Q2 FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sunil Bohra, Group CFO of MINDA Limited. Thank you, and over to you, sir.
Thanks, Faizan. Good evening, everyone, and warm welcome to all the participants. On the earnings call today, I am joined by my colleague, Ankur Modi. We have uploaded our financial results and investor presentation for Q2 FY23 on the stock exchanges and our company's website. We hope everybody had an opportunity to go through the same. I will first start with the industry updates and overview, followed by our financial and operational performance for Q2 and H1 FY23 and some strategic business updates. Post that, we will open the floor for Q&A. Starting with industry update, government's focus on boosting public infrastructure through enhanced capital expenditure is expected to augment growth and crowd in private investment through large multiplier effects. The second quarter of FY23 witnessed a turnaround in consumer sentiments with demand growth across vehicle segments on both year-on-year and sequential basis. Robust demand, easing supply constraints, and easing of commodity prices are expected to continue providing relief. Further, increased focus of the auto industry on localizations and the earlier announcements of the PLI scheme by the government will aid in developing India into an attractive alternate source of manufacturing. With respect to the auto industry, especially for two-wheeler and PVs, the order book continues to prosper, led by multiple new launches and planned capacity expansions by the OEM. Domestic two-wheeler production is picking up pace on the back of good monsoon season and improving consumer sentiments in the rural markets. Festive season kept the spirits high and led to a good momentum in demand for two-wheelers, which resulted in highest production in last 6 quarters and sequential growth of 17%. Electrification continued to see pickup in two-wheeler segment and is gaining higher market share on month-on-month basis. The demand momentum for electric two-wheelers and three-wheelers remains strong with high growth in Q2. We expect this to continue going forward. PV sales continue to stay strong, led by festive cheer and sustained retail outlook post-festive sales. The quarter saw volumes of over 1 million units, which was highest ever in a quarter. The outlook and order book from the OEMs is encouraging on the back of robust demand outlook substantiated via bookings and waiting period across segments. With the easing off in the commodity prices and shortages of chips and semiconductors, coupled with new launches on both ICE and EV vehicles, we maintain a positive outlook on PV sales for second half of FY23. On regulatory front, the government has extended the anti-dumping duty on alloy wheel, which is the four-wheel alloy wheel, to have level playing field for the alloy wheel manufacturers in India. The move is welcome and is expected to be a barrier to cheaper imports into the country. On the EV industry front, we continue to believe that the EV industry is at the cusp of multi-fold growth. The government had set a target of installing more than 5,000 curbside EV chargers in the next 3 years. This infrastructure amplification will act as a catalyst for growing EV demand across segments. We are also seeing strong demand from a traditional ICE segment, with increase in the number of first-time buyers and their preference to internal combustion engines EVs due to high upfront cost for EVs. We are also witnessing increasing premiumization and demand for more premium products across segments. With this, we are able to increase the effective kit value. We are optimistic about the demand scenario from both domestic and international markets. Supported with a diversified product portfolio, increased content for vehicles, and cross-selling of products to our existing customers, we maintain a positive outlook on revenue growth in medium to long term. We also continue to deepen our R&D efforts, enabling us to seize the opportunity in the automotive segment, especially from the EV space, which points to a solid future. Moving to key operational highlights, you may refer to slide number 5. The company has been in continuous pursuit for new and advanced technologies. While company's R&D team has developed several innovative products and solutions in-house in the last few years, we have also formed joint ventures to gain access to new technologies to accelerate localization and time to hit the market. As you know, the board has recently approved 2 such joint ventures, first with Tachi Japan for PV seat reclining mechanisms, and second with Buller Motors for traction motors to cater to electric two-wheeler and three-wheelers. We will share more details on these joint ventures in subsequent. During the quarter, the company has also announced significant expansion in four-wheeler alloy wheel, four-wheeler switches, and now setting up of a greenfield four-wheel lighting plant to meet the growing demand for these products. Coming to the financial and operational performance, you may refer to slide number 7 and 8. At consolidated level, revenue from operations for the quarter increased by 36% year-on-year basis to 2,877 crores from rupees 2,114 crores in Q2 of FY22. While revenues increased by a healthy 13% on quarter-on-quarter basis, as the company continues to gain market share and increases its kit value supported by gradual recovery of industry volumes. We have witnessed growth amongst all our products, with alloy wheel registering phenomenal growth. We recently commissioned additional 60,000 wheel line for PV alloy wheel plant at Dawal is ramping up well, while for two-wheeler alloy wheel plant, all 4 lines had achieved the rated capacity utilization. We have been surpassing previous highest quarterly sales for last couple of quarters. We are pleased to inform you that we have surpassed our highest ever quarterly sales in Q2 FY23 as well. As guided, we have continued to outperform the industry with our 36% growth against industry volume growth of 12% year-on-year basis. Even after factoring the price increases due to commodity prices, there is a significant delta with respect to the industry volumes. EBITDA for the quarter was at 318 crores, improving by 40% from rupees 228 crores on year-on-year basis. The EBITDA margins for the current quarter had improved to 11.1% as against 10.4% in the sequential last quarter and 10.8% in the corresponding quarter last year. Operating leverage supported by increased volume has led to margin expansion. However, higher energy costs and inflationary impact on other administrative expenses had constrained further margin expansion. Finance costs have increased sequentially from 17 crore to 19 crore as well as on YOY basis. The increase is on account of increase in debt as well as increase in borrowing costs pursuant to multiple interest rate hikes by the RBI. We see sequential increase in tax expenses from 31 crore to 55 crore as previous quarter had reversal of paper tax liability on movement from old tax regime to new tax regime for the company with a lower tax rate. The profit after tax, which is Uno Minda's share for the quarter, was at 100 as against 95 crore in Q2 FY22 and 139 crore in the previous quarter. Coming to the business segment-wise performance. Starting with switching systems, you may refer to slide number 13. The segment achieved revenues of 800 crores for Q2 FY23, contributing 28% of our consolidated revenues. We continue to receive incremental orders from OEMs as number of switches increase in year-on-year basis with increase in features. Consequently, during the quarter, we had also announced setting up of a new four-wheeler switch manufacturing plant in Farrukhnagar at Gurugram, Haryana, with investment up to rupees 110 crores in phase 1. Besides switches, we have recently also received order for heated grips from an American two-wheeler OEM. Domestic customers have also started showing keen interest in developing similar grips for them, albeit at much lower cost. Moving to lighting business, it has achieved revenues of over 659 crores for Q2 FY23, contributing to 23% of our consolidated revenues. Lighting business has also been growing steadily quarter-on-quarter basis, supported by access to advanced lighting technology from erstwhile venues. Building on our patented switch exports, we have now also won orders for fog lamps from American two-wheeler OEM. During the quarter, we have also received order for complete lighting solution from a two-wheeler EV OEM. Moving to our casting business, it has achieved revenue of 614 crore for Q2, contributing to 21% of our consolidated revenues. Casting business continues to grow with expanding capacities, with increased demand and penetration of alloy wheels. As you can see, percentage share of casting business revenue has increased from 15% in corresponding quarter last year to 21% in the current quarter. During the quarter, we had announced another capacity expansion by 60K wheel per month at Bawal with a capex of 190 crores. It is expected to be commissioned in Q2 FY25. Total four-wheel alloy wheel capacity now stands at 295K per month with LPDC of 25K and another 90K is under construction. For two-wheeler alloy wheels, all 4 lines have been fully ramped as we almost achieved rated capacity production of 9 lakh wheels in Q2 FY23. Starting with anchor customer, we now supply to 3 major two-wheeler OEMs and will start supplies to 2 more OEMs in subsequent quarters. Our die casting business has now also started serving EV OEMs beside two-wheeler OEMs. Moving to acoustics, slide number 14. Our acoustic business has achieved revenue of 181 crores for Q2, contributing 6% of our consolidated revenues. While India business remains stable, our European subsidiary Clarton remained under pressure with unprecedented increase in energy costs and lower industry volumes. Moving to our kitting business, which achieved revenue of 268 crores for Q2, contributed 9% of our consolidated revenues. Revival in PV segment and better volumes from two-wheeler had supported the growth in kitting business. Export of suspended seats were marginally impacted due to ongoing geopolitical issues. Moving to other product business, which have achieved revenue of 355 crores for Q2, contributed 12% to our overall top line. Other businesses mainly comprise of controllers and sensors, ADAS, blow molding business, battery aftermarket, etc. All of them have reported growth QOQ basis. Sensors and controllers, we have achieved revenues of around 120 crores for the quarter. We are on track for, in fact, ahead of track for achieving guidance of 400 to 500 crores of FY25. During the quarter, we received export orders for side stand sensor from Italian two-wheeler OEM as well as export order for wireless charger. The share of profit loss of associate joint ventures for Q2 is at 28 crores against 21 crores in Q2 FY22. While all our JVs associates contributed positively, major contribution came from Denso-10, Roki and TG. Moving to slide number 14 on aftermarket and exports. In terms of our revenue pie for the quarter ended September 30th, our OEM business accounted for 91% and aftermarket business at around 9% for Q2. Our aftermarket division revenues were at 252 crores as against 225 crores in corresponding quarter last year. Aftermarket revenues have grown 12% YOY basis and 13% sequentially. Aftermarket continues to grow at healthy run rate with increased focus and marketing efforts. Moving to our cash flows and debt levels, our net debt as of September 30 was 706 crore compared to 570 crore as on March 31, 2022. And our net debt to equity stands at 0.17. Net cash flow from operating activity for the first half ended September 22 was at 280 odd crores, even after increased working capital requirement on account of increase in revenues. We also incurred capital expenditure of around 218 crore during the period for various expansion projects already announced. During the period, the company also paid final dividend for FY23. As you will see, the investments and operational fund requirements, including dividend, had been fully funded through internal cash generation. Overall, while the net debt has increased by 136 crores during the first half, which is primarily on account of investment of 125 crore in Frevo AG Germany as part of our understanding for the joint venture, and an investment of 25 crore in Rica MINDA for the expansion in Haryana. We have also been making steady improvement in our ROCE, which on an annualized basis stands at 19.5%, which is highest in last 3 years. Moving to the strategic business updates, starting with the joint venture with Buhler. The board has approved to enter into a JV agreement with Buhler Motors GmbH, a leading global supplier of customized mechatronics, to develop, manufacture and market traction motors in India and other SAARC nations. The JV will offer traction motors for the battery-driven electrified two-wheelers and three-wheelers. Uno Minda will hold 50.1% stake in the JV, while the remaining stake will be held by Buhler. Buhler Motor is a 165-year-old organization currently headquartered in Nuremberg, Germany, with manufacturing facilities in Germany, Czech Republic, USA, Mexico, and China. Their expertise is much beyond DC and BLDC motors, gear motors, and pumps. They supply more than 20 million units annually to its customers. They specialize in automotive industry, aviation, and many other industrial applications. Over the last few years, Uno Minda have built one of the most formidable EV-specific product portfolio in the industry for two-wheeler and three-wheelers. Addition of traction motors will further complement the company's impressive existing EV-specific product portfolio, specifically the motor controller. Uno Minda has the advantage of motor controller, which will help our customers with complete solution. The potential fit value to the EV two-wheeler and three-wheeler will further increase with addition of traction motor. The company and Buhler had started design, development, and production of engineering in parallel and see significant market potential going forward. So JV plans to incur capital expenditure of 110 crores, including sustaining capex over a period of next 6 years. The investment will be scheduled to meet the demand. The company will be initially investing 17 crore as equity share of investment in the JV to part finance the above capital expenditure, while remaining is expected to be funded through a mix of debt and internal accruals of the JV entity. Moving to another joint venture, which is with Saatchi S. As you know, during the quarter, board had also approved to enter into JV agreement with Saatchi S Company Limited, a global seat system creator headquartered in Tokyo, Japan, for manufacturing and marketing of seat recliner mechanisms for four-wheeler passenger vehicle in India. The JV will offer various products, including recliner mechanisms in first phase, with the intention of expanding into other seating mechanisms, seat frames, and complete seating assembly. Uno Minda will hold 51% stake in the JV, while the remaining stake will be held by Saatchi S. Established in 1954, Saatchi S is an integrated automobile seat manufacturer from development to production. They have 70 facilities in 13 countries and provide products and services to leading OEMs around the world. Their consolidated revenues for fiscal year 22 were 206 billion yuan. Uno Minda is already a leading player in the automotive seating systems for two-wheeler and commercial vehicles. The JV will help expand Uno Minda its seating systems product offering in PV vehicle as well. In the first phase, the board has also approved initial equity investment of up to 10 crores in the JV. Moving to the another strategic initiative, which is setting up of a new four-wheeler lighting plant. As was guided earlier, the company had been winning significant new orders and gaining market share in the lighting business. The company has achieved increased traction with both Japanese and Indian OEMs. In order to meet the increased demand, the company plans to set up new lighting plant with a total capital expenditure of rupees 400 crores to be spent over a period of next 5 to 6 years in a phased manner. The initial outlay, which is phase 1 for setting up of the plant, will be 230 crores to be spent over a period of next 2 years. The remaining will be spent as sustaining capex thereafter based on the envisaged new business. Phase 1 is intended to be commissioned by Q4 of FY23. The company is evaluating various locations to set up the plant and is expected to finalize within a quarter. Another strategic initiative, which was merger of iConnect and Harita Ferrous, we would like to update the progress on a couple of merger schemes, which is iConnect and Harita Ferrous and MINDA Storage Batteries, demerger of battery business and merger into MINDA. The merger of iConnect is expected to be in the last stage of approval with its next hearing scheduled on 17th of November 22. The merger scheme for Harita Ferrous and the battery business of MINDA Storage Batteries was also filed with NCLT. NCLT heard the first motion application and the order is reserved for pronouncement. It is expected to be completed by March 23. With this, I would like to now open up the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi. Congrats on decent numbers. So firstly, sir, on this alloy LMT side, we have seen a very solid ramp up in this quarter as well versus first quarter. So can you share the revenues that we have done in the passenger vehicle and two-wheel alloy?
Okay, anything else?
Yeah, that's the first question. And secondly, because obviously we have announced all these capexes in the switches and four-wheel lighting as well. How do you see the capex and investment in 23 and 24?
Okay. So thanks, Ashutosh. Thanks for the compliment. In terms of alloy two-wheeler, that is almost operated at the capacity in Q2. The actual revenues during the quarter were around 150 crores.
150 crores?
Yeah.
Okay. And passenger vehicle?
The balance is... okay, you are referring to the entire, I would presume, the casting.
Yeah.
Okay. So Minda Kocha did roughly 325 crores during the quarter.
25 crores. And current capacity, like I said, is 295,000 wheels per month. So it was operating up to around what level during the quarter on an average? Like alloys produced during the quarter?
I understand the last expansion of 60K. Don't have a number readily available, but I think that can be taken offline if you are okay.
Yeah, sure. And capex guidance for this year and next?
So, Ashutosh, I think you know very well. Normally, we don't give capex guidance, so only we normally give at the Q4 call. So, most probably, we should be able to give visibility in May because for us, a lot of our expansions, while we are currently in a phase of expansion of our switches, wheels, and recently light also. But a lot of our capex comes through a brownfield or an incremental capex, which gets finalized only when we do our budgeting exercise. So that's why we normally, as you know, comment on that only in April, May. Okay. For this year? So this year, I think we have been sharing that number. We are sticking to that number. And with this increase, which was, I think, 600 odd crores, yes, the three projects which we have announced. Earlier, it was wheel for 190 crore, 110 was MINDA Rika, and now for lighting. So all these will have some expenditure this year. From this lighting project perspective, this year we might have primarily amount going towards land and also maybe some advances, not beyond that in the next 4 months. Okay, so I mean the capex number should be slightly maybe ahead of 700 crores in this year, right? Maybe around that number. Okay. And you mentioned in the comment about this energy cost and inflation and all this. Obviously, as of now, OEMs have not given pass through. But recently in the Maruti Concall, they talked about maybe some of this inflation being passed on in Q4 and all. So, what kind of margin impact you are seeing from this side, especially energy cost, if you have any rough estimate of that? Your voice was not very clear, because I could hear the energy prices you are talking about.
Yeah. I'm just trying to understand what is the probably rough estimate of this energy cost inflation in our margin.
No, it's very difficult to comment, Ashutosh, because the biggest impact we have on energy cost is primarily in the casting business. I was referring to the energy cost impact more so from the European business, which was the Platon. So there we have got a significant impact because of energy costs and inflation impacts, and also the lower volumes. That's what I was referring to, that our Platon, which is a Spanish business, remain under pressure.
Okay. And lastly, sir, obviously we have seen very strong ramp up in our profit from associate. And you did touch a bit that probably Rocky, Denso, and PG Minda are doing well. But even last year, I think Rocky obviously was impacted a bit, maybe even 1 year last year, but generally they have been doing well. But this year, in say YOY, which company has seen strongest growth in terms of profitability among these 3 or 4 companies?
From that perspective, Minda Onkyo, which was the last quarter in loss, is into profit. So if I see last quarter, Minda Onkyo was roughly 1 crore of loss, whereas this time it's 3 crore of profit. So there is a clear delta of 4 crore in Minda Onkyo.
Okay. And is it because of the volume improvement, or this is because of some price pass-through from OEMs?
No. There are two reasons. One is the definitely volume. Another is, if you remember, when we had been discussing a couple of years back, there was a huge pressure and delay in terms of localization of parts. So I think that has all been done now, and that is what is clearly showing that impact in terms of the performance.
Okay. Thanks and all the best. I'll join back with you.
Thank you, Ashutosh.
Thank you. The next question is from the line of Aditya Jhawar from Investec. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats on new JV and new order wins. My first question is on the lighting business. So Sunil, if you can tell us what is the split of two-wheeler and four-wheeler in the lighting business? And secondly, our four-wheeler lighting order wins in terms of margin and ROC, how different they are as compared to company average?
Sorry, come again. What is the second question?
The recent order wins in four-wheeler lighting, how different are the margins and ROC profile as compared to company average?
Okay. So first things first. So in terms of lighting, the two-wheeler lighting business during the quarter did something like 250 odd crores, and four-wheeler lighting did somewhere around 200 odd crores of revenue during the quarter. That is, the domestic business. Then you asked about the new orders for four-wheeler. How is the margin and ROC? So as you know, board has today only approved this DPR, and the ROC and margin, etc., they are all as per our group norms. So it will be in line with our average or maybe marginally better.
Marginally better than the company average?
Yeah. From a ROC perspective. May not be for margin because of maybe little better asset turn.
Okay. That's good to hear. And secondly, on our joint venture with Taichi, if you can help us understand what is their global market share, what are the key OEM relationship globally which we can benefit from in India?
So Taichi, Aditya, is as I said, is a very large company with almost close to $2 billion in terms of revenue, with manufacturing in 13 countries. They have a relationship with almost, I would say, all the OEMs. For more details, we can inform separately. You can also refer to their website. It is a listed company in Japan, so sure every information is in public domain. In terms of India business, so what we have done, and as I said, as of now, we have got a business for a recliner mechanism. It's a very small component. So as I said, it is put in the door to get into PV manufacturing. This is just the initial phase. We are working to work on develop a DPR for a full seating mechanism. As of now, it is only mechanism for seats. So it will be a gradual and maybe a little slow entry, but at least now we are getting into PV seating, which I think has been a long expectation from all of you guys as to when are we going to get into the PV shipping. So yes, it will be a slow journey, but good thing is, yes, we are putting foot in the road.
Okay. And if you can share like last quarter, that what has been the EV order wins in Q2, and if you can break it up into EV component and non-EV components.
So we normally have been giving every 6 months, Aditya, because quarter to quarter we normally don't capture this information.
Okay.
We gave in last quarter. Before that, we gave, I think, in December. So December and then June. So maybe in the next result, we will give you for the half.
Okay. And the final question is, on the RM side, is it fair to assume that, most of the, under recoveries are now behind, and we should see a sequential, uptake in, gross margin from here on?
I wish, Aditya. I think our endeavor, has been very, very clear, and that's what we have been able to achieve also, is whatever is the price commodity volatility, we should be able to pass on to our customers, and we have been saying consistently for last 1 year that we have been more than satisfied in terms of passing through that commodity price movement to our customers. So if the prices goes down, that also I have to pass on to him. I can't keep it with me, right? So it works both ways. It is not only when prices goes up. Even when prices go down, I have to give it back to my customer. So from that perspective, while you might not see any benefit, but at least good thing is you will appreciate it insulates us from any such movement in future, because like in short term, we are seeing there is a drop. But this can again turn the tide around, right? So whenever this happens, we will not have any significant impact. Yes, timing-wise, there can be some pluses and minuses on quarter-to-quarter basis, but on a full year basis, we don't expect any gain or loss.
Okay. I'll join back in the queue. All the best.
Thank you, Aditya.
Thank you. The next question is from the line of Mumuksh Mandlesha from Emkay Global Financial Services. Please go ahead.
Thank you so much, Ajay sir, and congratulations on a good performance and progress on new businesses. So, continuing on the margin question, sir, how do you see the two-wheeler alloy plant has been fully ramped up now, sir? Has it reached the normalized margin or more efficiency expected in coming quarters? And can you also indicate on the PV alloy wheel, has the data stabilized, considering the competition pressure was there on the segment?
So, Mumuksh, thank you for compliments. So in terms of margin, as I said, Q2 we have had very stable performance from the alloy wheel business. So, but because of very significantly higher gas prices, so both, as I said, casting business primarily is the gas consumer, because in casting you use mostly for melting gas only. So there has been some impact. But if you see from the margin perspective, definitely it is little below our group average from a two-wheeler perspective, but four-wheeler is still above our group average.
Right, sir. So can you talk about the regulation changes happening related to airbags, seat belts, and acoustic alert systems? Any plans or investment to tap this opportunity, sir?
Yeah. So in terms of airbag, we all know that this airbag of 6 being mandatory has been, the implementation time has been extended or deferred, you can say so, but we are ready. Whenever customer demands, I think we should be able to service them. In terms of seat belt, there has been a regulation recently post the unfortunate incident happened, I think, a month or two back. So there has been a regulation now that all the front-facing passengers in a car, irrespective of number of rows, even if you have second row or a third row, passengers who are sitting facing the front need to have mandatory the seat belt warning buzzer. If you are not wearing the seat belt, obviously the buzzer will sound. So that has become mandatory. That is effective sometime next year. And from the acoustic vehicle alert system, AWAS, so we already have a product for AWAS for EVs, and we are already working to service one of our customers. We are working on developing that product. So once that, as of now, obviously volumes are very low. So once that volume increases, we will also see our volumes getting aligned. So yes, I think from a regulatory perspective, all these things are positive for us.
Yeah. Thank you so much for the opportunity, sir.
Thank you, Mumuksh.
Thank you. The next question is from the line of Siddhartha Beya from Nomura. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, first question on this the strategic business update which you have shared. So first on the wheeler motors, can you?
Not clear, Siddhartha. Sorry, please can you repeat? Your voice was not clear.
Yeah.
Mr. Bera, please increase the volume of your device.
Yeah. So, just wanted to check first on this JV with Wheeler. If you can throw some more light on how is the product portfolio in terms of the wattage which they already have, and by when do you expect this JV to start, and if you have any anchor customers as of now. So some more color on this progress on this JV.
Yeah. So, Siddharth, while I would give you a brief as you requested, but maybe for more information, you can also refer to their website. It's a very old company. They have roughly 300 million euro plus kind of a revenue, 750-year-old company, family-owned company. And their 90% business comes from autos and 5% from aviation and 5% from others. So they do manufacture a lot of motors. So jointly with them, we are working to develop motors for EV, specifically to start with two-wheeler and three-wheeler EV. Our intention is to start production in second half of next fiscal. And from anchor customer perspective, we are at the last stages of finalizing 2 anchor customers, hopefully within this quarter itself. So we should be able to give you that maybe confirmation in our next call. But we are at the last stages of maybe just getting the alloys.
Got it. And these motors will be in the sub 3-4 kilowatt range, or?
So it is up to 6 kilowatt range, yeah.
Up to 6 kilowatt, okay.
6 kilowatt, and we'll be working to take it up to 9 in the first stage, and then maybe think of taking it further.
Okay. And then on the other JV, the seed JV, which you just discussed briefly, would you be able to share the value of the components which you can potentially make over a period when this ramps up in the future?
So as of now, as I said, Siddharth, the component which we are manufacturing is very small. It's the recliner mechanism. It's not even a full recliner. And we are currently in discussion with Tachiyas to come up with the full-fledged DPR for complete recliner, which we have promised to the board to come back in next 2 quarters. So maybe by May, we should be able to give you a better visibility. As of now, it is very small. It is not very big. And as I said, it is primarily a foot in the door. But we are not going to stop here definitely.
Okay. Okay. And we also do some EV specific components already. So would you be able to share the revenues which we would have done for some of these components in the quarter?
Ankur, do you have that number handy? Not as of now, but I will maybe. So you can maybe share it after. Yeah, I share. So, not having handy to that, sorry for that.
Okay, no issues. And so lastly on this margin again, if I look at the last 7-8 quarters, at least on the other expenses side, we have not seen much operating leverage coming through, despite a significant improvement in the revenues. So, just how to understand this, should we expect that the percentage of revenue should be similar for other costs, or shall we expect some amount of operating leverage also probably to come in at some point?
Definitely, Siddharth. Actually, we are also expecting a good operating leverage from this, but the entire electricity cost, including gas, is part of the other expenses. So, from that perspective, if I see the wheel business alone, and I know somebody else have asked for quantification of that, and I said we don't have this number added up for all. But I can tell you from a wheel business alone at the current prices we have versus the last year prices, the impact is more than 25 crores to 30 crores a year. In addition, we have a large amount in Europe. So all that had hit our other expenses. If that has not been there, I'm sure you would have seen that operating leverage benefit.
Okay. Got it. Thanks a lot, sir. I'll come back in the queue.
Thanks, Siddharth.
Thank you. The next question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir. Good evening, and thank you for the opportunity. First up is on the castings business. We have mentioned that we're getting into passenger vehicle side as well. Could you give some sense on what components are we going to get into there for the passenger vehicle business?
So, Mukesh, as of now, you know that we have been primarily serving the two-wheeler, and we were here to one of the TV customers. But we are not having any TV customers from casting. So recently we have secured a business from one TV customer. The SOP is expected in the next financial year. So initially it is very small. I think the annual revenue is going to be roughly around 15-20 crores. But again, it is once you get onboarded with the customer, then definitely that the entire bouquet opens. My bad, I think Ankur is reminding me. The annual business potential is around 25 crores, not 20.
Right. But it will be for it will be for ICE components.
Yes, you are right.
Got it. And secondly, I think there was a question on this earlier, but just trying to recheck on the two-wheeler alloy wheels. This last quarter you had mentioned that you've probably just about stopped burning cash there, and as we achieve scale, we'll kind of turn EBITDA positive. So just wanting to check there. You did mention that we are slightly below company average, but does it mean that we have significantly scaled up the EBITDA there?
No, I think my bad. So alloy wheel two-wheeler is definitely has achieved our target EBITDA, which is little above our what we call the company average.
Okay. That's great. And continuing with this alloy wheel.
My apologies, I said somebody else earlier is little below. I was referring to the lighting two-wheel. I missed it was
okay. Got it.
Wheel, not light.
Right. And on the four-wheeler alloy wheels business, we in the past, the Minda Rika entity has been at about 26-27% EBITDA margins, and last year I think it came down to about 21%. Is this, is there a trend here, and will this kind of keep coming off, maybe close to 17-18%, or is that only because of raw material costs, aluminum costs especially going up? And do you think we can maintain 20% plus kind of margins there?
No. I think Minda Kosei you are referring to, right?
Yeah. Sorry. Yeah, Minda Kosei. You're right.
Yeah. So Minda Kosei, I think we said last year also that there have been two impacts. One, because of the sheer commodity price increase, which is, even though we have been able to pass on the commodity price increase to our customers, the denominator itself had increased. So in terms of percentage, it is dilutive. That's number one. And number two,
right.
I think we have been consistently that we do expect margins to come down gradually from a 20% odd level to around 15-16%, which is still well above our company average. So that was number two. And number three, this also, as I said little while back, had an impact of significantly higher gas prices. So all these factors have impacted Minda Kosei profitability in terms of percentage and somewhere in terms of value also.
Got it. So yeah, us coming to this 15-16%, how long will that take? Is this going to happen year or next year, or Sorry, sir. Hello.
I'm saying, Mukesh, it is actually below 15-16%.
Oh, it's already below 15-16%. Got it.
Yeah.
All right, sir. Thank you. I'll get back in the queue.
Whatever you are saying is already factored in.
Sure. Got it.
Thank you. The next question is from the line of Rishi Vora from Kotak Securities. Please go ahead.
Thank you, sir, for taking my question. Just a follow-up on our strategic JV for traction motors. So will we be working also closely with Frevo JV, because I think in that JV we manufacture traction motor controllers, and in this we will be manufacturing traction motors. So if an OEM requires both the products, so will we be working together to supply that product, or how will be the arrangement over there?
So definitely, Rishi, as customer wants, we will work. We have both the products. If customer wants jointly, we will be happy to give them a product which is motor controller plus motor. But in case customer wants separate, obviously we will be open to give them separate as well.
Understood. And sir, just on the traction motor front, given that the market itself is very competitive, there are many players who have already developed this product. So what will we be doing to differentiate ourselves from the competition?
I think our USP has been very clear. In addition to whatever strength which MINDA brings in terms of QCDD, our endeavor is to, if I use a simple language or a single line, to bring in German engineering at Indian cost.
Understood. And just confirm, clarification. You said capex for this year broadly would be 700 crores.
Yeah, between 600 to 700. I think this question was raised earlier by Ashutosh.
Right.
So you're saying it will be around 700. I said yes, it will be around that number.
And investments for 23, any guidance?
Investment? What do you mean by investment?
As in investment in subsidiaries and all, or it is a part of capex when you say?
So as of now, there is no plan to include any additional funding. Whatever is announced, like today, it was also announced of around 15.3 crore investment in MINDA Catalect. So
right.
With that, as of now, there is no request from any subsidiary for any growth funding which they may need.
Okay, so first half plus 15 crores, that would be your guidance as of now.
Right.
Yeah, okay. I'll join back in the queue. Thank you, sir.
Thank you, Rishi.
Thank you. The next question is from the line of Peter Agnell from Sema Wealth Management. Please go ahead.
Hello, good evening, sir. So my first question is, can MINDA maintain this run rate of 2,500 crore plus per quarter, given that you mentioned that commodity prices get passed on? So can we expect this run rate to continue going forward?
Okay, anything else?
Yes, sir. And also then, what is your market share you have in the EV space in two-wheelers and three-wheelers? And Q2, what was the export revenue share? And do you witness any softness in demand in exports? Thank you.
Yeah. Right. So run rate of 2,500 crores, Peter, definitely we are working to do much better than that. But you know that our destiny, which is 90% of our revenues are linked with the OEM volumes. So as long as volumes remain in this region, we would definitely be able to do this and even more. In terms of market share, I think it's too premature to calculate market share for EV, because even if you see the EV numbers, there is a list which gets published every month as to who has produced how much in terms of OEMs. A lot of them you will find they are just assembling. They are buying the kits from China and outside of the world, and they are just assemblers. So as of now, market is still very premature and at a stage where there is no right data available. So in the absence of that, it won't be fair for us to comment on market share, etc. But whosoever are the larger players, we have been working with, I think, almost all of them, be it new age EV players or the traditional ICE players who are also into the EV. In terms of export revenue, our total global revenues from export and from India and also domestically in the overseas location is roughly around 16-17% of our total pie during the quarter. In terms of demand, definitely there is, in fact, as I said, for suspended seats, which we primarily export to Europe. So there has been some demand impact which led to little lower volumes for the suspended seats. But the exports which we are doing to US, like of switches, etc., as of now, there is no significant impact there.
सर this last 2 quarters of 2,500 plus crore run rate, उसमें से what percentage would you attribute to higher raw material cost के वजह से उतना it went up that much, like growth versus?
To compare versus last year, I think this data point also we shared last year. Roughly around 8% is primarily because of the commodity price increases.
Okay. Thank you so much for your time.
Thank you.
Thank you. Next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi sir. On this casting side, you mentioned that the revenue from passenger vehicle alloy wheel is around 325 crores and 150 crores is your two-wheeler alloy wheels, which is 475 crores. We have reported around 614 crore revenue in this vertical. The remaining 139 crores is that such a large amount is MJ casting?
So two-wheeler is 160, not 150.
So yes, casting, die casting is contributing to some around that number, yes.
And in the previous quarter, it was only around 84 crores, right? So it is, like say, 300 crores was passenger vehicle, 100 crores was two-wheeler, and then 84 crores was that casting. So casting has jumped so much on a quarter-on-quarter basis?
Yeah, casting has seen a good improvement.
And this is that MJ casting only, right?
That's an MJ casting.
Oh, this is only driven by, I think, two-wheel. As of now, two-wheeler and that we had some CE brake related business, right?
Yes.
These two only. Okay. And sir, on the lighting side, you mentioned that 250 crores is the two-wheeler lighting revenue, right?
Yeah.
So remaining 400 odd crores roughly out of 659, Delvis will be how much?
So four-wheel lighting is roughly around 200 plus, maybe around 210 odd number is for four-wheel. Two-wheel is roughly around 250, so that is 460. Yeah, balance is for ASEAN and Delvis because we have lighting in ASEAN as well.
Okay, ASEAN, so you include ASEAN plus Delvis put together is remaining.
Yes.
Okay. And the switches segment in the quarter-on-quarter improvement, is it that we have seen bigger improvement in MINDA Rika, or it is two-wheeler also has done very well?
Quarter-on-quarter, two-wheeler has improved by roughly 20% plus in Q2, if I see Q1 to Q2.
Okay. So how much is the four-wheeler revenue in this out of 800 crores? Which is MINDA Rika essentially?
MINDA Rika quarterly something around 310 crores.
210 crores. Okay, sir. That's all from my side. Thank you.
Thanks, Ashutosh.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Sunil Bohra for closing comments.
Yeah. Thanks, Faizan. I would like to thank everyone for joining on the call. I hope we have been able to respond to all your queries adequately. For any further information, we request you to please do get in touch with us. Stay safe, stay healthy. Thank you once again for joining with us.
Thank you. Ladies and gentlemen, on behalf of Uno Minda Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.